For years, China's real estate market looked unstoppable. Cities kept growing. Skylines kept rising. Apartments kept selling, even before they were built. To the outside world, it looked like endless growth. But behind the glass towers and cranes, something was quietly breaking. Today, we are going to explain how China's real estate boom turned into a crisis, why millions of homes were left unfinished, how debt grew out of control, and why this collapse matters far beyond China. This isn't just a property story. It's a warning about what happens when growth becomes an obsession. Why real estate mattered so much in China. In most countries, real estate is one part of the economy. In China, it became the economy. For decades, property development drove a jobs, a local government revenue, a household wealth, economic growth. For many Chinese families, property wasn't just a home. It was their main investment, their retirement plan, and their symbol of success. If prices went up, people felt richer. And as long as people felt richer, the system worked. The business model that fueled the boom. Chinese developers followed a simple but dangerous model. They sold apartments before construction was finished. Buyers paid upfront. Developers used that money to buy more land, start new projects, pay old debts. Then they repeated the cycle. As long as prices kept rising, this looked brilliant. But in reality, it was fragile. Because developers weren't just building homes. They were building on debt. Debt, and more debt. To grow faster, developers borrowed heavily. Banks lent money. Investors bought bonds. Local governments depended on land sales. Everyone benefited, until they didn't. Some developers became so leveraged that they owed more than they could ever repay. A cash flow depended on constant new sales. One slowdown could break everything. This wasn't sustainable growth. It was a debt machine. Eventually, the Chinese government stepped in. Officials realized the risks were growing too large. So they introduced rules to limit excessive borrowing. This is where the system cracked. Developers suddenly couldn't borrow as easily. Couldn't refinance old debt. Couldn't finish projects on time. Sales slowed. Cash dried up. And once trust disappeared, panic followed. Unfinished cities and broken promises. Across China, construction stopped. Cranes froze mid-air. Buildings remained half-complete. Entire neighborhoods stood empty. Millions of buyers had already paid. But their homes were never delivered. Some homeowners stopped paying mortgages for apartments that didn't exist yet. That was a shock to the system. Real estate wasn't just slowing down. It was breaking confidence. Why this crisis is different. This isn't a normal housing downturn. In many countries, prices fall and then recover. But China's crisis is deeper because a property is tied to household savings. Local governments depend on land sales. Developers are heavily indebted. Confidence is hard to restore. When people stop believing property is safe, the entire model collapses. And once trust is lost, it doesn't come back easily. Can China fix it? China still has powerful tools, a strong government control, large banks, policy influence. But fixing a crisis like this isn't simple. You can inject money. You can support banks. You can ease regulations. But you can't force people to believe again. Real estate bubbles don't burst loudly. They deflate slowly. And slow collapses are often more painful. Why the world should care. China isn't isolated. It affects global markets, commodity prices, international investors, economic confidence. When the world's second-largest economy slows, everyone feels it. This crisis is a reminder that no system grows forever, no bubble stays hidden forever, and no economy is immune to reality. The big lesson. China's real estate crisis isn't just about buildings. It's about a debt disguised as growth, a confidence mistaken for stability, and the cost of ignoring risk. For years, it worked, until it didn't. And when systems built on belief lose trust, the fall is always bigger than expected. The real question isn't whether China's property market will recover. The question is, what will replace it? If you want more deep explanations about global finance and hidden economic risks, subscribe for more. Because the biggest financial stories are never just about money. They're about human behavior.